GM. So, it's been a quiet day in the markets, hasn't it? Of course not. Never a quiet day for Bitcoin. Let's dive into it, starting with the lower time frame charts to explain to you guys what smart money are doing and how they have catalyzed this move. So, on the left, you have the Bitcoin USDT chart, and on the right, we have the IBIT chart, so the BlackRock ETF chart of Bitcoin. Now, yesterday, this was what the chart looked like. You have your IBIT options wall at 50, and that correlated to 88.2k on the USDT chart. So that was from over here, guys. IBIT wall at 50, and the upper wall was at 53. This is where the open interest of calls and put options were resting in a large quantity. So I mentioned in my Discord that this was a very key level. Losing that 50 level on IBIT, which was around 88.2k, sets up for an unwind. And the reason for that is because all of those puts that expire today get put in the money. They're put in the green. And all of the calls are put in the red. So you go back to this, you can see there's a large amount of open interest. So 32.5k put options, 5.2k call options, a lot of money at that level. So the puts, they're incentivized to push price below 50, and the calls, if you get below 50, they have to hedge or cover. Otherwise, their losses are going to multiply and multiply. So that's what leads to a sharp unwind of positions. And we already saw volume was increasing on the way down. That signals continuation lower, as I teach in the school, harmony and divergence using volume. So it looked like perhaps a big player was getting annihilated. And now this is what the chart looks like today. So we lost 50. I was updating you guys live at the time. Told you guys that this looks like a big unwind is coming, and that's exactly what happened. We lost it, back tested the level perfectly. That's where the puts defend that level because they're now in the money. They're now going to short more to push price below 50 and keep it below 50 come options expiry today. And now that led to a further unwind because positions are simply offside, and OPEX dynamics are very important to look at. They don't teach this on YouTube because it's not the sexy stuff. It's not the clickbait stuff where you get a thumbnail of a guy looking stupid saying Bitcoin is crashing or we are screwed. No, this is how markets really work and what is actually driving them. This is what smart money are doing. So we played and called that move perfectly since breaking that 50 level. Said the unwind was likely, and this was key here too. On the break, we had a volume increase. So back to the chart here. What is this? This is a push lower with high volume. And then I said, if you get a push below this IBIT options wall with greater volume, that's harmony, because that means effort versus result. The effort that players are putting into the market to sell it down is being met with the result of a new low. So sellers are in control. More and more sellers are showing up with more force, and the market is respecting it by going lower and closing to new lows. That signals continuation. So just by analyzing volume, you don't even need to know about this options dynamics. You can see that price was likely to continue lower, and it's now increased volume again on this push. So markets don't look like they bottomed yet. This typically leads to continuation lower because we're seeing sellers show up with more force and the market respecting it. There's signs of longs starting to capitulate and starting to get wrecked, but not fully yet. So I think lower to go still. Volume is rising to the sell side and price is respecting it. It's going lower and lower and lower. So again, it looks like all of these dynamics, the smart money, the offside people coming into options today, they're getting wrecked here, and that's leading to this unwind. And it's more than just options. You also have the ETFs coming with a 900 million outflow day. Now, of course, BlackRock reports a day late, so this was 355 million of selling from yesterday, or the day before, sorry, because it's Friday today. But 900 million, that's one of the bigger outflow days that we've seen really in the last month. So could that be a good sign? Could that mean we're starting to see the early signs of capitulation? Possibly. We know in the short term, ETFs don't buy and sell in the greatest places, but over long term, they do. And the average price of the ETF buys is a decent one. But when you see big outflows like this is when we're now starting to see some of that panicking begin. So let's look at it. What have we got next week? Well, next week we have some interesting data. Obviously, this week we had all of the jobs data come out. Was a pretty much a nothing burger because you had mixed data. Today we got flash manufacturing PMI and services PMI, not a big one. But next week we have prelim GDP. So this is tentative at the moment. Let's see if it gets released. Again, just more uncertainty. What's going on? Why is data not being released? What's the status of the government? All of these reasons are culminating together, along with the options dynamics, along with volume increasing, along with the ETF outflows to set up this bearish move. Maybe that can be interesting. Maybe that can mark some sort of capitulation if we do get GDP. Of course, you've also got PPI. Maybe that's interesting. And PCE, inflation data. So there's a lot going on next week. There's a lot going on with the markets right now, and volatility is really high. So if you're looking for longs, you've got to be patient. It's not the best time to be longing falling knives, because when we look at the data, this has been a solid downtrend, right? Open interest has continued rising. We can remove that. And longs and shorts are therefore building. But the shorts, they're the ones who are right in this open interest. So they're the ones printing until they're not, until the market stops going literally vertically down. It can be that simple. You just have to wait for the market to stop going down. I know that sounds easy in practice, but you can see on candles like this, people just get it wrong and they just get absolutely wiped out. And of course, if you're using a system, you've got risk managed, then you're fine. But the people who are getting liquidated and wrecked certainly aren't using a system and certainly don't have their risk managed. And that's the people who are being forced out of the market now. That was your first sign of some forced sellers are starting to arrive here. And overall, it's a big wipe in open interest. When you look at volume is now starting to increase. And you look at something like the daily, volume's already almost above that moving average, and we're not even halfway through the day yet as I'm recording this video. So that looks like it's going to be a big volume day in general. So that's another good sign to see, the fact that volume is actually now starting to increase. And overall, we're now going to be looking at these deribit options levels as we head into next week. So you've got 90, 85, and 80. I think if we go to 80, especially the closer you get to next week, maybe this is on Monday, maybe it's today, I don't know. That's a level which you want to watch closely to see if that can hold. And that can be that wall that puts can't push it through, and they then have to cover if price bounces and squeezes up from there. And you've got 85 in between and 90, but more on that as we get close to it. Interesting, however, how the markets are shaping up here. So if we look at the higher time frame, what have we seen? Well, we're coming into this demand zone over here. 100-week EMA. On the super low time frames, it did provide a small bounce overnight. So we get this 100-week EMA over here. Let's turn this into 100. Cool trick here. Click on chart, and then you can choose the time frame you want the band to just sit on, and then you can be on any time frame looking at a different time frame EMA band. So let's do that. You want to untick this so that you don't wait for the closes, so that the band then follows to your lower time frame. And now we have the 50-week EMA here. So 200 weeks, sorry. We want to actually get the 100. There we go. So we managed to get a very shallow bounce off of this level overnight, but that then got blasted through. So when you're looking for longs on any short squeeze, potentially some sort of reclaim of this 100-week EMA could be an area of interest, I think. But again, you got to wait for that. You got to be patient. Price has a lot of work to do to get above there. That's going to be a lot of squeezing. So that's something I'd be looking at. When we go to the daily, what you then want to look at is, when do we see a candle like this? And really, it's better seen on the weekly. When do we see a candle which wicks down, fails to go lower, and reverses? And this candle also happened to have high volume, so above average weekly volume. When do we get a candle like this? Because that shows failure to go lower, sellers exhausted, and can be the start of a reaccumulation. And that candle can be seen many times, as I said, as I've been saying on all these videos. When do we get a candle like this? Get that capitulation, finishes green, and starts off that reaccumulation. So far, are we close to a candle like that? No, we're still somewhere in this red stage where we're going down. It's very simple. We're somewhere in this red stage where we're going down. Can there be squeezes? Yes. But is there the sign of a bottom? No. And that's why I say expect continuation lower, and the low time frames are backing that up. So where can this go? Now, obviously, we've got a big zone here between 74.5 to 88.7k. I think this general area should be able to hold for a bounce. Maybe we have to go into the 70s. And below this area, of course, we've got the next reaccumulation, the next demand zone over here. So these are your two areas you're looking at. This was previous smart money reaccumulation. We're heading into that now. Yes, it looks terrible right now. Yes, it looks totally bearish. Yes, seems like Bitcoin's crashing and everyone's losing their minds. I see it in sentiment. People are talking about how it's over, how crypto's done, Bitcoin's never going to come back. And they say it every damn cycle. You're going to get a rant from me, guys. Every damn cycle, you get these down periods where everyone just wants to leave. Bitcoin's done. Quantum computing's taking over. It's the end of the world. Should have just stuck to stocks. It's just a classic, isn't it? Just a classic. And you're getting one of these periods now where, yes, we probably have lower to go. Doesn't look like a bottom here, as I said. None of these blue arrow signs that we're seeing. Volume is increasing on the way down. But people, they will always be bullish on Bitcoin when it's above 100k and start leverage longing, even though they've never even built a trading system, never back tested a system, put in absolutely no work. And then when it starts going down and actually starting to offer good high time frame opportunity, they'll say, nah, it's over. Worst cycle ever. No alt season. It's just ridiculous. And those people are just destined to lose forever. So my advice is, don't be on Twitter. Don't be watching sentiment. Build strategies. Build real trading systems. And crush the next 10 years, because markets aren't going anywhere. And I teach exactly this inside the trading school. I teach you how to build your own system, how to build wealth in crypto, managing your short-term and long-term portfolio so that you can be an asset accumulator, an asset owner, rather than what the poor are, which is just debt owners and cash owners. Because eventually Bitcoin will turn bullish again, guys. I know, crazy. Sounds crazy, right? But it will. And then everyone's going to be like, oh, should have bought. Oh, should have bought. And it's like, you just need a strategy. You just need a system to then tell you what to do. I've been doing some high time frame buying on my long-term portfolio because I protected it. I sold it all above 121k. This is now a great zone for me. I've updated you all in the Discord on that. There's no need to get bearish when the market is literally crashing and like give up on the cycle. I'm talking long-term. Of course, we trade in and out, long and short. We've taken loads of shorts this week on the short term, printed a bunch. But long term, it's not the time to just start calling for 30k and getting emotional. It's the time to now focus in and lock in on your strategy. So quick rant on Bitcoin there. If we go back to the lower time frames, what is the trend that's being supported here? So 12 and 21 EMAs on the 4 hour, that is your trend resistance. You can see every time we wick into it, move lower. Every time we wick into it, move lower. Wick into it, move lower. Unable to get to the 50, 100, or 200 yet, or any of these order blocks. And we're really just setting more and more order blocks over here. You've now got this big cluster of redistribution here. So markets making new lows as we speak. As I said, no surprise. You've got volume harmony. You expect continuation lower when you do have volume harmony. So this is the spot market, which is making new lows. Futures isn't because they've got a deeper wick. But H4, 12 and 21 bands are being respected. They're leading to new lows. Expect that to continue. And right now we're in a fast trend and we're actually accelerating down. So it's more something like the 15-minute, which on low time frames, again, it's just a trend trader's paradise right now. Any of you guys that have built systems with me, you're seeing we're printing off of the shorts, especially just simply looking at the trend bands and seeing what's being respected. All of these touches leading to new lows. And until that changes, until you start to see the 15-minute bands flip green, as they did over here, expect continuation lower. It's simple. They will flip green. The trend will get disrespected, and that leads to the squeezes. And if it's going to be a short squeeze, it will only be on the 15-minute. If it's going to be a bigger squeeze, well, then you're going to see something like the 1 hour actually turn green. And if it's going to be a proper short squeeze, you're actually going to see something like the 4 hour turn green, if not the daily. And really, we've had the daily bands red since now October the 13th. So markets have been down. I've been saying they've been down. They're in a downtrend. It's just as simple as that. You've got to wait till the market stops going down and wait till it stops respecting some of these trend bands to then start looking for some longer term longs. We're getting into the area where it's offering high risk to reward, but we just got to wait for that final capitulation, that forced selling, that high volume candle, that big green weekly reversal I've been talking about all week to set them up. And in the meantime, beautiful shorts on the respected trend band. So that's what I'm looking at in terms of Bitcoin. Now, when we look at the wider market, so what are we seeing in terms of all the others? So let's take a look at the NASDAQ. So NASDAQ is actually breaking down here. We're seeing that this chart is actually just closing below the September FOMC level, and that should lead to continuation lower. If I actually get this up and do this, there we go. That's the charts I was looking for. So looking at the wider market, NASDAQ has sold off since the Nvidia earnings. So not a surprise. Everyone got bulls long on AI for the last 6 months, and now it's selling off. It's like markets go up and down. Even in uptrends, they go down. Even in downtrends, they go down because that's what markets do. So do I think AI is over? No. But is a pullback granted? Of course, markets can pull back. And Nvidia earnings was bearish. That was a sell the news event. So a news event divergence, we call that, because it was a bullish earnings. They beat it, yet the markets are going lower. So that shows that longs are massively offside when bullish news can't produce higher prices, because that then shows the positioning is actually undercrowded on the sell side, and that's why markets go lower. So NASDAQ has also broken the September FOMC level, a further news event failure. So rate cut on October, rate cut on September has led to lower prices. Rate cuts have not been bullish. They've been priced in, and sellers are using it to sell. Markets are going lower of what should be perceived as a bullish event. So again, people are too long, and the undercrowded side is actually the sell side. So you're seeing stocks break down, and below the September FOMC level, expect continuation lower. That's now the direction. It's in a downtrend. If you get above the September FOMC level, expect chop between October FOMC and September FOMC, and above this all-time high, which is the October FOMC, that's when you can say, okay, price is bullish, direction looks to be up. But right now, direction is down. Expect further sell-off since we're below that key level. Now, gold bounced off the October FOMC level, chopping around between all-time high and October FOMC. As I mentioned, no clear direction on gold until it either breaks this October FOMC, then I'd expect lower, or breaks the all-time high, then I'd expect direction higher. And in between, it's just chop. So that's how I'd play it on gold. Again, NASDAQ, expect lower below September FOMC and expect continuation higher above October FOMC and chop in between. Dollar. Now, I've been mentioning this one, haven't I? It's above that $100 psychological level. That is a risk-off move. It struggled to accept above it previously, but while you're above it, the bias is for higher until you lose that level. So if we can accept above this 100 level on the DXY, and that does lead to trend continuation higher, expect further risk off. Simple. If you lose that $100 level, well, that's when you can say, okay, back to chop. Maybe we can see some bounce and relief in risk on assets. And below October FOMC level, that's when you're saying, okay, dollar direction is down. So right now, direction is up and risk off continues until we lose that 100 level, which when you lose it, you see that's when you can actually set up some sort of bounces. You see NASDAQ here, bounces exactly when the dollar on this day lost 100. So lost 100, started trending down. That's when the NASDAQ then came to a bottom and then started rallying just for a squeeze. But generally, while this has been rising now and going above $100, that's when you see the sell-off. So risk off on the dollar above 100. That is the full market update, really. I'll get you guys the weekly outlook tomorrow for a high time frame update, and I'll see you guys in the next one. Drop a like, drop a comment, drop a subscribe if you enjoyed. GM.